Alright guys, we are back and things are still looking a lot better today. Not minding this nearly as much as I minded a couple days ago. Let's hope we can keep on pushing. I'll be glad when these next couple columns, a 7-day and a 30-day, we start getting some green back in those. That'll make me feel a lot better. Some news coming in. New York's mayoral frontrunner pledges to turn the city into Bitcoin hub. Eric Adams, who has outstripped the better-known crypto advocate Andrew Yang in New York City's mayoral race, has made his own Bitcoin pledge as he retains his first-place lead. He says, I'm going to promise you, in 1 year, you're going to see a different city. We are going to become the center of life science, the center of cybersecurity, the center of self-driving cars, drones, the center of Bitcoins. We are going to be the center of all the technology. That is a bold statement. Keep an eye on that, guys. Bitcoin miners to see biggest increase ever in profitability. According to Slush Pool, the oldest cryptocurrency mining pool, Bitcoin's difficulty may reach a maximum negative adjustment of 25% based on recent block times. The important metric determines how hard it is for miners to find new blocks and earn rewards. As of now, a 20% drop is on the cards. It would already be the cryptocurrency's biggest difficulty adjustment ever, which will in turn translate into the biggest increase in profits. Slush Pool estimates that the profitability of the remaining ASIC miners will skyrocket beyond the most optimistic projections for 2021, while hundreds of thousands of ASICs sit idle in trucks, cargo ships, planes, and warehouses. Those that remain online will become more valuable. It goes in and talks a little bit about their hash rate. Miners from China are currently migrating to Central Asia, the US, and Russia. Crypto is not going anywhere, people. Idle mining farms outside of China can only cover 5 to 10% of the mining needs. Mining farms outside of China can cover no more than 5 to 10% of the capacity of companies that are rapidly exporting their mining equipment outside of mainland China. Most of the new farms outside of China are still under construction, while after the mining ban, there are from 1 to 2 million idle Bitcoin mining machines in China. So there's still a lot going on. The Bitcoin industry is responding to Wall Street's ESG concerns. They are doing it out of the sense of survival, said John Reek Stark, former chief of the U.S. Securities and Exchange Commission's Office of Internet Enforcement. And we got a little clip here.
We just saw a 50% drop. So this idea of a super cycle that would never happen again, well, that's out the window. And I do think it was precipitated by the ESG movement and this notion, which was exacerbated by Elon Musk, that there are some real environmental problems here with Bitcoin, with the mining of Bitcoin. And so I think that a lot of institutional buying went on pause, shall I say. And I think there were a lot of expectations that there would be follow through by institutions. Half of the solution is understanding the problem. And I think that this auditing of that miners, certainly in North America, are willing to do around how much of their electricity usage is generated by renewables is going to bring that topic into stark relief and will encourage, we believe, an acceleration in the adoption of renewables beyond which otherwise would have taken the place. I don't know if you have seen the paper that ARC and Square collaborated on around this notion that when you're dealing with intermittent energy sources like solar or wind, it would be very nice and remunerative for the ecosystems out there to include Bitcoin mining. So when you filled up the storage, it can spill over into mining and probably will enable then an overbuilding of a solar because there is now more of a profit motive associated with it. First, I think what happened was that Elon probably got a few calls from institutions. I noticed that BlackRock is their number 3 shareholder, and Larry Fink is the CEO, is focused on ESG and especially on climate change. So I'm sure BlackRock registered some complaints. And perhaps there are some European very large holders, and Europe's extremely sensitive to this, more so than the US in many ways. And so he probably wanted to reassess the situation, saying, wait a minute, what have I gotten into here? Do I not understand the environmental impact? And so now I think that he has uh, encouraged a lot more conversation, a lot more analytical thinking. And I do believe he's going to become a part of the process. I think he'll be very happy to introduce Bitcoin mining into a Tesla ecosystem, maybe working with merchant power producers or what have you. And I think, you know, he started Tesla because he wants to save humanity from ourselves, from environmental disaster. I think he'd like to be a part of proliferating solar and other renewables faster than otherwise would be the case, not just for selfish reasons having to do with his solar roofs and the power walls and so forth, but again, for the same reason he started Tesla. And you know, one thing that this has done for us at ARC, we have never invested in solar. And the reason we've never invested is we need to believe that within a 5-year time frame, without subsidies, an industry is going to be able to hit escape velocity and be profitable. We have not really been able to say that in a big way about solar. This dynamic might change that. So I'm actually quite excited about it.
There's some good information for you there. Banning cryptocurrencies to counter crime is a nonsensical excuse. I do totally agree with that. Hackers remain drawn to cryptocurrency. It talks about, pseudonymous on the blockchain. Excuse me. Sorry, I lost my place there. And it talks about how there's other methods that offer more privacy, putting crypto's criminal role into perspective. That's probably the part I'll focus more on. While governments strongly believe Bitcoin and other cryptocurrencies is the main reason for online crime, the reality is often different. According to a recent chain analysis report, only 0.34% of the crypto market's combined transaction volume pertained to illicit activities in 2020. That is a sharp decrease from the 2% recorded in 2019. If anything, this research by chain analysis shows fewer and fewer criminals focus on Bitcoin and other crypto assets. Digging in a bit deeper, it becomes apparent that ransomware remains the top solution for online crime, and it is a very significant threat and problem. As more people now work from home due to COVID-19 restrictions, there are new opportunities for criminals looking to make a quick buck. That doesn't automatically mean that cryptocurrencies will be phased out, as the majority of consumers have no idea how this industry works. And it just talks about how a ban is not the solution. You know, any attempt to crack down on cryptocurrency because of criminals use it is bogus. If that truly is the objective, there are different approaches to explore rather than banning. Since one cannot use cryptocurrencies without the traditional financial system, it is not hard to see where governments should focus their attention. Unfortunately, none of them seem willing to acknowledge that the system they help maintain is at fault for most criminal activity today. Mike Novogratz from over at Galaxy Digital, he says that Bitcoin is the future for Africa. He says, this is a fascinating tweet storm. I was cheering for France in yesterday's game versus Portugal, but after reading this, might switch allegiances. Crypto has a future in Africa. That's a strong intuition. So, some interesting stuff there. And Africa seems to be a big focus of all these fintech guys. I mean, there's such a large population there that's unbanked. Article 7 of Bitcoin's Latin American coup, El Salvador's Bitcoin law will make BTC a compulsory currency and create costs for everyday taxpayers, hardly an advancement for freedom or free money. And when it says, when I first heard that El Salvador passed its Bitcoin law, I was astonished. It never occurred to me that any national government would embrace it and make it an official medium of exchange. As a longtime advocate of what is called choice in currency, I welcomed any nation's attempt to let Bitcoin compete on a level playing field with its existing official money. But when I turned to the 2-page long statute itself, my excitement turned to dismay. Though parts of it do indeed put Bitcoin on an equal footing with the US dollar, El Salvador's official currency since 2001, the law's 7th article says every economic agent must accept Bitcoin as payment when offered to him by whoever acquires a good or service. In other words, Bitcoin is to be not just a legal tender in El Salvador, but a compulsory one. Excuse me. Compulsory choice. Forcing businesses to accept some particular money is both unusual and utterly at odds with the whatever that philosophy is that led to Bitcoin's development and caused so many libertarians to embrace it. So, they're talking about how it's going to kind of play into the totalitarian. It says, but perhaps the best evidence of Bitcoin's limited appeal is none other than Article 7 itself. After all, were Bitcoin truly the perfect exchange that it was claimed to be, and El Salvadorians could only gain by switching to it, Article 7 simply wouldn't be necessary, making Bitcoin acceptance costless, supplying the necessary infrastructure, technology, and training, and simply allowing them to use it without penalizing them through capital gains, taxes, or otherwise for doing so ought to suffice to eventually Bitcoinize El Salvador. So it's interesting stuff. You should check into the whole Article 7 thing. What do these metrics mean for Bitcoin? It talks about the fear and greed index. When Bitcoin traded below extreme fears, Bitcoin traded below 35,000, and then the past 2 days it has gone from fear, and this shift came when the time the price was recovering. Retail traders across exchanges seem to disagree with the bullish narrative. Based on the average transaction fee chart from the block, it's likely Bitcoin's price may take a bullish turn before the end of June, and the price is likely to cross 40,000 yet again. I'm all about it. All about it. We need Bitcoin to rage, whether you hold it or not. Whatever you hold, you need Bitcoin to take off right now so it can go with it. Citigroup launches a digital asset unit within its wealth management division. We have another giant coming into play. I'm not going to read this whole article, but given that, no, I'm not going to read it all. There you have it. The city's coming. XRP's restriction movement could change. Excuse me. I'm a mess today. XRP's market was witnessing a recovery at the time of press. The price of the digital asset turned around on Tuesday from the lows of 54 and is now trading at 64. This 25% recovery has established a base at the price level of 61 and was acting as immediate support. Meanwhile, resistance was marked at 64. XRP's current price is taking the initial step towards recovery. This recovery could maintain the price of XRP between the above mentioned range as volatility has remained low in the market as XRP moves forward. So, building on that, I didn't have this pulled up, but I'm going to pull it up. Give me 1 second, guys. You can look at it here. They're talking about XRP. We'll look at it there. We'll look at, who's another one we'll look at? We'll look at Bitcoin. That'll be it. We'll just look at that. So right now, now I saw this on Blockchain Backer. This is not my work. I am not taking credit for it, and I'll probably butcher it trying to explain it, but I'm going to try anyway. So he was talking about how a lot of times when these support levels like this are broken, like we just experienced, you would come back and you would double tap it, kind of bounce back down again, and then go off. But something that he noticed when he looked at the 4 hour was that if you brought these in a little tighter, you actually notice here that on the 4 hour, when we broke support here, we actually did come back, double tap it, and now we were right back here again. So he wasn't saying either way really, but he was just hopeful seeing this that we might already be on our way out. You can see the same thing on all the charts. Here's that resistance line coming, from over here. You see where it comes down, reaches right out to it, boom, rejects, and now we're crossing over the top. Let's see if we can stay. You'll see the same thing on the total altcoin market cap. I thought he does such great work. I wish I could pick it up like that guy, but anyway, you see the same thing happening right here. So it's happening across the board. And with that, we're going to close with this little gem I found. This is from December 5th of 2000, the Daily Mail. The internet may be just a passing fad as millions give up on it. So just imagine being one of those people that pulled their money out in the year 2000 and is looking at this article right now or watching this video on the same internet they gave up on. Don't be that guy with crypto.